Hey everyone, this is Ryan B. with Practical Forex Trading. This is your weekly analysis for the pound dollar, so the pound versus the US dollar. The date is May 17th, 2020, 11:36 a.m. Eastern Daylight Time here in the States. So we're looking here at the 4-hour for the pound. We'll go ahead and zoom out real quick to the daily. Overall, my sentiment is bearish. I've got here last week's pivot points marked out, and we see that, really things where we left off last week, things just really fell off the plank. These last 5 consecutive days of losses really just point a giant, massive bearish candle, and we even see aftermarket hours that this price is tanking more. So there is a weird kind of like gap in time. You'll notice for some platforms when you see prices moving on Sunday, but you can't trade yet. It can be really scary, so that's why you never want to hold your positions open on Friday, because if you did have a buy and your stop was here, it's going to be ignored in this off-market time. So I see a lot of movement happening now in off hours, big sells happening for the pound. Seems very bearish. We look back this recent last 6 months, we see lower highs. Then if we draw a parallel trend channel just from this, if we consider all this price action between October and March until the big dropout, like a trend channel, then prices attempted to come back in with a recent rally. Now they're being forced back out. So we can, it looks like here we do have some near-term support at about the $1.20 mark. So way back in August of 19, so I'm guessing that's our next stop. Then we can see prices bounce up here to the $1.22 mark before resuming again. If we see a break of the $1.20 mark, then we are going to see prices possibly potentially test $1.14 again, which are those really low lows that we haven't seen in a long time. So let's go ahead and look at historically. You know, you always hear you can learn about the future from studying the past, and though it's a bit of a cliche, it's very true when it comes to the Forex. So we go back, let's look back way back in time. Let's go to a monthly chart. Let's get real big. We go all the way back to 1985. And we see that was the last time the pound's been that low. In fact, the pound versus the dollar went all the way to $1.05. Quite a different story from 2008 era when it was $2 to the pound. So real, the swing is possible. So we're testing these historic lows, been 50 years almost since we've seen those lows. And at this point now we're going to see a major sea change in the way markets are interpreting things. Basically, people prefer the US dollar when in times of uncertainty, and people prefer like the pound and the euro in times of when they feel more risky. They want to put more risk. That's just the way the dollar and the yen as well are considered reserve currency, meaning that people want to reserve, or being reserved. You know, if they wanted to play it cautious, they're going to throw their money there. So if we map this out, trend channel like this is a multi-year parallel downtrend. We can see now prices moving below this triangle. There's going to be a little bit of congestion here, maybe over the next couple of months, as we try to break through this $1.20 mark. But once we do, we'll see a return to $1.14, and then beyond, possibly back to return to $1.05. If in order at this point for me to be bullish, we would have to see prices pop back above the $1.25, $1.26 mark, and then we could see another attempt for $1.35. But that doesn't look too likely in the near term. So personally, I'll be looking for more opportunities to sell pound versus the dollar. All right, I wish you all a great week. I hope you make lots of pips trading. Talk soon.